G'day all, welcome back.
Yeah, welcome back to Money in the Tank, everybody.
Episode 38. I was AWOL last week, unfortunately, for the oil crisis talks between the two oil gurus, Arnie and Brad. Part of the what do they call the oil?
OPEC.
What is it? Sorry, OPEC group.
Yeah, OPEC.
Yeah. So apologies for missing, and we've got another man down today, Brad. He hasn't been able to get up for his record streak of 7, so we miss you, Brad. We'll see you next week, mate. I'm sure you'll make a speedy recovery.
That's it, mate. And me, I'm staying strong. I'm battling on, so a little bit under the weather, tankers, but we'll get there. So just I'm Arnie.
Who are you, Arnie? Who are you?
I'm all right, mate. Arnie, tax professional. How are you?
Joel Seach, principal advisor, Harp LFG. Good to be with you all again.
Yeah, and if you want to get us, it's at Money in the Tank on YouTube, Twitter, Instagram, and Facebook. So you can leave us a like, comment, subscription anywhere there, and we appreciate the feedback and any questions you got for us.
Great. And what have we got on today, Arnold?
So we're going to talk about a few things today. The main one is the RBA has risen, has had interest rates rise again, so another 50 basis points. So we're going to touch on that, and you and I are going to chat about the Victorian specific energy rebate you can get by just comparing your current offer with your current retailer with the other offers. So, and a few bits and pieces, got the news and all that.
Absolutely. So Rivkin's rules to begin.
Yes, please. And the book from the source. Brad made a comment last week saying that he preferred the internet ones, but I'm saying I don't like cherry picking. I want Joel to give me a true random from the book.
Yeah, true random. So this one's with Rivkin with a bunch of Budweiser. You can't see the book, unfortunately. Budweiser promo models. In life, stick to what you are good at. And then people who are the best tend to be fanatics.
People who are the best tend to be fanatics. I guess that's true. Yeah, like fanatics, I guess another way of saying it is, passionate people.
Yeah. I think there's a lot of people that are successful that I know over the years that are potentially on the spectrum or have a certain personality type. They're really able to hone in on, people might almost call it Asperger's, but people are able to really hone in on something really well. So that's a version maybe of being kind of fanatical.
I heard it just reminds me of a funny quote today. That old quote which says, like, do something you love and you'll never work a day in your life. I heard a variation of that quote yesterday, which was, if you do something you'll love, you'll never own a house, which I thought was hilarious. But yeah,
not bad. But it's an interesting one. I don't mind those ones. So that was the chapter Renee on success. So there you go.
This is why the book's better, because you get left field Rivkin.
Yeah, left field's good. So I guess touching on the hot topic today, giving a rundown at the start, was the RBA, Reserve Bank of Australia, has lifted the interest rates again. First. So for the listeners, they meet on the first Tuesday of every month, apart from, is it December, maybe?
Mate, I have no idea. I'm going to take it.
No, maybe January they don't meet. Okay. But for the listeners out there, let us know. I think it's maybe January. But yeah, they met and raised again, like most forecast and economists thought. I think there's about a 91% thought that they would raise by 50. And yet they raised by 50. So the cash rate now at 1.35, Arnie?
Yeah, 1.35, mate. So
1.35, yep.
More pain on the mortgage repayment. My bank's already signaled to me that they're going to be raising the rate, and I don't know if that one's factored into this one. So it might be the fact that we've got another one coming shortly after. Yeah,
they do it quickly. The banks they tend to take a little bit longer with lifting their deposit rates, but they tend to jump really quickly when it's the borrowing rates, which is always an interesting one. And that's the money kind of market rate that they that they lend on to the consumer. So the cash rate might be at 1.35, but the loan might your variable rate home loan might be at 3.25 or 3.5. So it's a good time to check on your current deal you're getting at the moment and see see who's out there, who's the best or who's offering the best kind of deals.
Yeah.
Fixed rates, there's an argument to say possibly too late to the boat to kind of get the fixed rates in now, because that horse may have already bolted in terms of, like, thinking back a year ago or even 6 months ago, those fixed rates were really attractive because the economists and the actuaries and the general consensus were thinking, well, we're probably still going to be a good year and a half away from raising rates, because the RBA has come out and said 2024 is going to be when we start to think about it, earliest maybe end of 23. And they've sort of gone back on their word a bit, which I've seen a few interesting articles saying people are quite annoyed with them because people are trying to plan ahead and map out, where they're going to be at with their loan repayments, which is, rightly so. And the RBA have kind of jumped a year and a half almost earlier than they said they were ever going to. And, you can understand the reason why, because they're worried about inflation and the economy.
Yeah.
And I'll touch on a point in terms of redraw and offset and some of the data they look at. So I'll touch back on that in a minute. But yeah, jumping back to fixed rates, I guess, potentially a bit late, because, fixed rates, the actuaries and, the banks have already factored in, those rate rises that they foresee coming. So, it's a hard one to win the fixed rate game. And I've always said that. And maybe, if you like to have a bit of security and know that you're partially there with some guaranteed repayments, then you might fix a bit and then keep the rest variable to allow, if you get extra cash flow or a bonus or extra income comes in or a gift, you can pay that variable down a bit quicker, because fixed usually they kind of limit you. But the hindsight's 2020 vision, and we've spoken about this in the pod before. The best time to fix would have been probably 6 months ago, because those rates were still super low, because there was no forecast of lifting for a fair while. But now they've jumped right up again.
I saw a bit of commentary on this as well, and the same commentary you were speaking about. So you've seen the commentary where people are saying we're upset because you said 2024 and we were like life planning, and there's a lot of not editorial pieces or opinion pieces talking about people who were upset or didn't see this coming. And then you got the flip side of the coin, where you've got people who are commentating on the issue saying, well, the Reserve Bank of Australia had to act because inflation's out of control. Obviously, we've discussed this on I think we've touched on this topic on the last couple of episodes, at least in a little bit of detail, because, it's a supply side issue, but all that the Reserve Bank of Australia can address is the demand side of things. And that's why they're trying to raise rates. And at the same time, it's causing a few anomalies and a little bit of pain in the housing market. I was reading something the other day that was saying that, obviously it's having the intended effect of driving home prices down because the cost of maintaining a mortgage is going higher. But at the same time, it's driving the cost of rent up because it's pushing people into the rental market, which is making the demand grow there, which means there's less supply, just, making it harder all around for people. So,
and just on that, the rental market, and you make some great points there, Arnie, and the rental market's really been feeling the pinch a lot, even the past 18 months, because the government's done a bit of a poor job in terms of helping supply of the investment property market. They've almost disincentivized property investors who essentially supply a large portion of the public rental supply. I think there's a portion or a percentage which is a lower side that's government supplied, but then the rest of it is really supplied by those everyday individual mum and dad investors. They haven't done a lot to incentivize, and they've made it quite challenging to be able to get an investment property and maintain and look after it. And then you have state-based legislation that comes in on top of that. You've got your lending criteria that you need to meet, and they've really made it challenging. They've thrown in debate about capital gains tax coming or going, and now we're seeing a real squeeze and a real crunch with a lot of the data that I see and read about rental supply being at historical lows compared to where it was 5 or 10 years ago, even when we had fewer people living in the country. So, and that's the reason we're seeing these rampant rents go up in many states, many areas.
It's worrying, isn't it, mate? And I think the last government obviously was very, very focused on, at the start of the pandemic, they were trying to make sure that everything kept afloat, and a lot of the incentives they put in place were around home ownership for first home buyers, and they're pushing that. I guess part of the another part of the equation is foreign investment into Australia and how that has been restricted. And I would argue that there's more positive there with that regulation than there is negatives. One other point I just wanted to mention about this was that it's interesting, the scenario we find, just sort of touching back again on the Reserve Bank's decision to raise rates again. And I mean, I'm not happy about it. No one's happy about it. But I guess I kind of lean towards their point of view of them having to raise earlier than what they originally said. And yeah, they should not have said 2024. They should have kept it broad and vague back when they were making those comments.
Like they usually do.
Yeah, like they usually do. Why get specific and then have to wind it back? But I think I see the conundrum they're in, because they have to try and do something. And if they don't, we're going to risk a recession or potentially stagflation, economic contraction plus rising inflation. So there was another interesting article I read the other week, which focuses on America, the American market more so than ours. But I mean, it's sort of broadly applicable here as well, I imagine, which was that it's a very unique environment we find ourselves in, because there's like record low unemployment in the US, as well as this rampant inflation and the fear of a recession. So it's going to be very interesting to sort of see how it plays out, Jolie. But yeah, that's just, how do you feel about it? Well, which side of the coin are you?
So I've got a couple of things to piggyback off the back of your points there, Arnie. You make some great ones. The RBA at that time, I think they had to create a bit of calm amongst Australia because of what we were going through, the pandemic and the lockdown and the government coming out. And so they had to try to create, and they cut really sharply, really quickly. And I think I said on the podcast 2 ago that we're probably about a 1.5% RBA cash rate, pre-pandemic anyway. So we're still not even back to where we were.
Yeah.
And that was pretty low, fairly low period. And I guess anytime a government an RBA is tightening monetary policy, so increasing interest rates, it's the sign of, your economy is recovering and doing well. In this case, it's probably a little bit like they're trying to peg back inflation a bit, because, people are spending and consumers are spending, and, cash has been cheap for a while. So they're doing that. And they've weighed up risk reward, I think, in this scenario. And they've sort of said, what's the risk of us raising these rates sharply and quickly and getting them up again, to the reward of doing it, as opposed to not doing it sharp enough? Well, I think they've measured that equation up and said, well, they can see a lot of data, the RBA. They can see what people are holding in redraw, what people are holding in offset, what people's kind of buffer levels are with LVR, loan evaluation ratios, and equity. And I think they've said that, there'll be a little bit of pain for a few people, but the large majority will be okay, because they've kept their repayments at the levels they might have been pre-pandemic anyway. They've got buffers saved in, they've kept those levels high. The borrowing buffer rate, as we've said before, is like 25 basis point jumps. So they've got a buffer in there for serviceability criteria too, which is one of the best in the world, or one of the strongest in the world. So there's a lot of things in there. And the flip side of that, the risk of not doing anything from the RBA could be more catastrophic for the wider economy, because you don't want rampant inflation. You don't want to see things ramping up like they have in other parts of the world. And we probably haven't copped it as badly here. We've probably copped it in a few specific sectors, and we see it with petrol, we see it with building material prices, input cost trades. So there's definitely some challenges there, but you don't want to see that get worse. So, one could argue that maybe you've acted maybe even a little bit too late. And if you look at our neighbour across the road, New Zealand, different economy, smaller economy, but they were raising last year. So
I think that's one of the big criticisms I've heard, and I think it's the most valid. It's like, no, I think most people will see the rationale for why they're doing it, but they'll also say, why didn't you do this earlier? Why didn't you do it when, the economy was booming in the pandemic, because you've been raining money down to try and, save the economy, or I guess. But and one other point I will make, Jolie, before we move on is, unless you want to jump in here as well about this point, because America and other advanced economies are also raising their rates to combat inflation, if we don't follow suit in some regard, it weakens our currency, and it means money flows out of investments in Australia to those other currencies and those other places that have higher rates. So it's also, their hands are tied a little bit.
Yeah, it's a great point. Yeah, because you don't want to be your dollar, you don't want it to be too cheap, and you don't want it to be too expensive, because it potentially can hamper exports or imports. In that scenario. So for the listeners out there, is when the Australian government or the RBA raises our interest rate, it potentially means that people or overseas investors are getting a better outcome on their money, and they purchase things in Australia. They purchase the Australian currency, or in Australian currency, which reduces the supply of it, which helps in turn push that value of that currency up. And it's the opposite when our interest rates or we're not as attractive to get investment in, then they're selling Australian dollars and they're creating more supply, which sort of pushes it down a bit in value. So I think it's hovering at the time of this around the 70 cent mark, maybe, and it's been around that mark for a fair while now.
It's a pretty sweet spot for us, I think.
Yeah.
Like, I mean, you got pros and cons to it going higher and lower, but yeah, it's good.
Selfishly, if you're going on holiday, you want it stronger.
Yeah, so true. Remember that period back in the day when like it was above the US dollar?
We were actually in America when it was about 102, it got to 108, I think, or 109. And that was a real aberration. That wasn't common at all. And yeah, we were there in America for that. That was brilliant.
Going on an import spree, just buying everything from America.
Absolutely. But so if we kick on there, I guess, and jump on from the interest rates to then how that pushes onto property. We've spoken a bit about rentals, rental yields, I should say, going up, and property domestically here in Australia. So I was listening to some information the other day that was speaking about last month's figures for property in Australia, and I've said on podcasts before that every section, state, territory, region in Australia operates a little bit differently to each other. Unfortunately, the media, when it comes to property and investing, can be a little bit lazy and clickbaity, which we've said about, where they just lump everything together, which is not the case. So when you look around Australia, certain areas have cooled a bit. So Melbourne, Sydney, your big main ones, and that's the one that tends to get thrown in the mix whenever commentary or media, talk about property. Is they think of property as Melbourne and Sydney.
Yeah.
They just bulk it. They're like, oh yeah, property's growing gangbusters, or no, it's going down. So property market's cooled in those two areas because they're sort of two of the peaker, more price point areas. But then if you're looking at areas of those states, for example, like regional Melbourne has done really well, whereas inner city apartments haven't done that well and they struggle. Sydney would be a similar type thought pattern there in theory. But then you look around other states like Adelaide had a really good month. Brisbane is ticking along as well. Tassie had a slight negative. WA, I believe, is a slight positive. So that's what I mean about it's like almost a diversified portfolio, is everything operates a little bit differently. So, and one of the few times it operated all together was during the pandemic, because everything went up at once, which is not very common. It's usually everything has its cycles and different periods of time, and they perform differently. So always be mindful of that when you hear the media reports and stories, and they say, plummet, and they love things like bloodbath, and they love things like falling off a cliff. Not the case. Yes, maybe a certain area and a mining area and a high kind of risked or geared spot might have a really bad return, but people, property people need shelter. That's what its source is. That's what it is. So people are always going to need shelter. So there's always going to be a need for it. So as an investment vehicle, yes, if you're looking short-term, things will have ebbs and flows and ups and downs, and you'll feel it more on a short-term basis. But when you're looking medium to long-term, which we've always said is you're classifying as investing, that's when you will, more often than not, if you're in a decent area with a decent bit of economic growth and factors, you'll experience positive capital growth, which is what you want to see out of any investment, whether it be shares or property or crypto or whatnot.
Absolutely.
So that's probably that point, I think, in terms of just understanding and reading between the lines a little bit when it comes to those types of media reports.
Got to laugh about that because it's fear, right? Fear sells. Fear, uncertainty, and doubt, like FUD is what we call it. And it's in any investment vehicle or any category you want to look at. There'll always be a massive bias in news articles to the negative side because it gets people to click on it. If everything's rosy and going well, good. You look at the tile, good.
And property, has so many different levers that go into it. Interest rates is one of those. Yeah, it's a decent sized one, but it's just one. Like there's so many different factors that go into why a property market will do a certain thing at a certain time. And it's not just 100% pegged on interest rates, which the media will want you to believe.
What was that one? One of our very first podcasts, you and I talked about this, and I asked you about the terminology for like when you're looking to invest in a certain area, Jolie, and they've got like infrastructure spend or there's amenities. Like, what is that called again? Like, or I might be putting you on the spot here, but
there is probably a word for it, but there was a census data that came out recently, so you can get a lot of information on the overview and the demographic and what's going on in a certain area that you're looking to invest. The growth drivers is probably
Growth
the word you're
drivers.
looking
Yes,
for.
that's spot on,
So,
mate.
yeah. So I
think,
sort of managed to maneuver my way through that. But yeah, the census is a big one. But then growth drivers, yeah, there's a range of different growth drivers that go into supply, demand, and why an area makes sense or not doesn't make sense to invest in.
like for me, just me personally, again, general in nature, do your own advice. But yeah, interest rates are a big part of it, but you can't control interest rates. But growth drivers, it's like you can do the research, you can see what's going to happen in an area. And I feel like that's a massive piece of the puzzle as well, which, you know, is what I would be looking to focus on if I were to choose that as an investment.
Yeah, if you're solely looking at interest rates to invest, then you're not looking at the right thing. You're not looking at the right thing. So speak to a professional.
That's good stuff, mate. Or just generally,
generally nature too, Arnie, of course.
Everything's general in nature in this pod. I think
educational purposes.
Right, yeah, running joke. Just do your own research. None of this is investment advice, but yeah, I guess just quickly, one other thing we thought we might touch on, which is Victoria specific, is the fact that you can now go to. Let me just get the website up. It is compare.energy.vic.gov.au, and you can go through the number of steps, which is fill out your energy profile, fill out your consumption data. It shows you the available offers, and then you can compare the offers, and then you can put in your bank account details, Jolie. And you don't have to change or go through with, you know, a swap. But if you do all of this, the Victorian state government is going to give you $250 in your skyrocket. So how good is that?
Mate, love it. Anytime you're getting a little handout from the government that's not means tested or you've got to do this, that, the other, free money, have a crack at it. Just like the old days when Rudd gave out, was it $600 to dead people and everyone else?
800, wasn't it? 800 bucks. Yeah.
Came in just as long as you've done a tax return, you get it. So, but people that were 6 feet under were getting it.
I'll quickly share my screen, mate. I'll show you the.
Yeah, you're ready to go, mate. You're good to go with the screen share. And yeah, I did it the other day as well. It was very easy. Just logged on, got my last energy bill. Probably took me all of 5 minutes, 10 minutes. So it's probably worth your time, unless your hourly rate's $1,000 or more. It's not a bad little quick thing to do. 10 minutes, you jump on there. I logged it in, attached the bill, and away you go.
I thought I might show you this. It's just the Yahoo Finance article. Can you see that okay?
Sure can.
Yeah, so it's just going across the big major energy retailers in Australia here, and it sort of gives you an indication of in each state the price hikes they've announced. So there's going to be a big cost, a big jump in cost of living, especially in the energy space. And for whatever reason, it looks like Victoria, in most of them, so in this one, in Red Energy, in Energy Australia, in AGL, and it's not even mentioned here in Origin, isn't being price hiked as much as other states. I don't know what the reason for that is, if we already pay more or if, for whatever reason, but you can go and have a look at that yourself, tankers. And yeah, so I think in that particular article, if you just search Yahoo Finance and energy, cost of energy, there's some tips in there about how you can minimize, the bill, and a bit of lingo that you can ask when you speak to your energy retailer to try and negotiate a better price.
Yeah, there's some great tips there, and I guess Victoria, we're not maybe copying it as much, which is nice. I found out just accidentally I'm in a fixed price bill at the moment for my energy provider, so that's okay. Interestingly enough, we could probably do a bit of an episode on this. There's a couple of things out there that I saw recently that can track your energy usage and where it is in a house, and you can put it on your meter box and find that out. So there's a few little devices out there that do that. Obviously, solar panels have been around for a while, and there's things like batteries, like Tesla batteries you can put to store power.
Yeah, the power.
There's also a couple of providers that I've heard of recently, and even a couple of big instos that do really low interest rates on solar panel installs. So you can borrow from a bank, and you can pay an extremely low interest rate and get solar set up on your home. And there's even some providers that do it at a even lesser rate and potentially a nil rate, and they charge the solar panel installer for using them and going through them. So there's some pretty interesting little things out there, which relates to finance, because it does come back to savings inevitably as to what your output is and what your spend is with your cash flow and your expenditure. If you're potentially able to help minimize that by using these things, then may make sense to you to do it.
Absolutely. And, if you're helping the environment out with some solar panels on your roof, and saving a bit of money, which is going to go elsewhere, why not?
Absolutely. So, yeah, I think I might look at it in the future too.
Do you want me to hit you with the rapid fire news items? And I've rolled in a few crypto items as well to compensate for Braddle's not being here.
Let's do it.
All right, here we go, mate. So big news, Jolie. GameStop, GME, our first ever pod, has announced a 4-for-1 stock split, saying that trading will begin on a stock split adjusted basis on July 22nd. And in response to this news, GameStop was up 5.2% in extended trading hours. Apple has planned an extreme sports watch with the largest screen and a metal case. Jump in here if you want to chat about any of them, Jolie.
I did hear that Apple's finally, about a month or two ago, discontinued the iPod.
Oh, really? Has it kept going this long?
It kept going for this long. I think they finally discontinued it a few months ago. I read about that, so just reminded me. That was a game changer back in the day.
Absolutely. I reckon that's the demise of radio started with the rise of the iPod, I reckon. But yeah. So Boris Johnson, the Prime Minister of the UK, Bojo, there's a no confidence vote probably, and he said he won't fight it, but he said he won't quit. But he said that, if the vote goes against him, he would resign, but he's not going to quit otherwise. The Fed minutes for the Federal Open Market Committee, FOMC, participants at the June meeting, this is in America, concurred that inflation outlook had deteriorated and it might warrant a huge 0.75% rate increase. In the same meeting, it said many participants judged there was a significant risk of higher inflation could become entrenched if the public questions the Fed's resolve. And same meeting, participants concurred that high inflation warranted restrictive interest rates with possibility of more restrictive stance if inflation persists. They also recognized that the policy could slow growth for a time. And that might have been, and then they lowered the growth forecast for the second half of 2022 and 2023. So that's the rapid fire news items.
I love it. And I had one from a couple of weeks ago as well that, because I missed last week, Crown Resorts has been bought finally by Blackstone Group, which is a private equity mob. So the Melbourne, Sydney and WA casinos are no longer owned by or majority owner Packer. He's sold out and made a fortune.
It's already gone through, has it, Jolie?
I believe so. I think it went through a couple of weeks ago, I believe, and got finalized. Massive.
And here's my crypto news quickly, all right?
Yeah.
Cryptocurrency exchange FTX has more than $2 billion to backstop the industry if needed. So the CEO, Sam Bankman-Fried, said the worst appears to be over for the liquidity crunch in the cryptocurrency industry. And then off the back of that, crypto lender Voyager Digital files for bankruptcy. So those are the two. Oh, and one other big news item I got. So shout out to our listener, Beth. Thank you for bringing this to my attention on Twitter. The altcoin hub, yesterday, someone purchased 20 trillion SHIB, which was $210 million, the largest transaction in SHIB history.
Going all in on SHIB. So yours was second largest, was it then? So you've gone from first place to second place.
Oh yeah, I won't claim the largest purchase in history as my own, but yeah, I've got a few big purchases up there. The Sultan of SHIB, don't worry about it.
Love it. The Sultan of SHIB's been challenged. It's got a challenger.
Yeah.
Love it. And I did actually hear today that I think at its peak, the crypto, was it Bitcoin only 1 trillion cap value was last year, and it's down to 300 billion now. Maybe I think it was just Bitcoin. Sorry.
The total market cap of the whole crypto industry at the height of 2021 was 3 trillion, and now
so it was just Bitcoin got to about 1 point something trillion. It's down about 300 something billion by itself. So it's a decent whack. And I think the podcast I was listening to was sort of giving a bit of crap to, was it crypto.com with Be Brave, or what's their quote? What's the
it had Matt Damon or whatever.
Something for the brave.
For the brave. Well, yeah, bloody oath, it's for the brave.
Gotta be brave to see that happen. But anyway,
I think that's consistent with the whole industry. I think the whole industry market capitalization has now dropped below $1 trillion. Yeah.
Interesting. Great rapid fire items. Hope you guys enjoy. Make sure you bring your Q&As in for us and things you want us to touch on and cover us off on. So where should they hit us up?
Yeah, get us at Money in the Tank on YouTube, Instagram, Facebook, and Twitter. I've got one more item I wanted to cover before we jump into 50-50, Jolie.
Yep.
And it was something that came to my attention on Twitter, and it was from an account called Inna, the Deep Value Goddess. And she actually found it on an account called Finding Value, and it was in reference to Foot Locker. because Foot Locker has seen a huge drop off. And again, general in nature, do your own advice. But they've seen a huge drop off in their stock price on the news that Nike might be leaving them. And traditionally, they've only stopped Nike, but at the moment, Foot Locker is diversifying into Reebok and Puma. So just an interesting tidbit that they are valued now at about $2 billion market cap, and they're bringing in about $500 million. I think it's $500 million a year. So yeah, so I need to look into this myself a bit closer, but interesting opportunity that's now hit my watch list is Foot Locker. So I'll be looking further into that.
Keep an eye on them, see what they're stocking in your local Foot Locker outlet. General nature, as always. Great little tidbit. So hit us up with the Q&As, guys, and make sure you get those through to the right areas, and we'll ensure to try to get them on the show. We love hearing from you guys, and we love hearing about what you want to speak about. So in terms of covering off or wrapping up on today, we've got a 50-50 now. So I was actually thinking of this one this morning at the breakfast table, which worked out perfectly for today's podcast recording. It essentially touches on a couple of things that are really important. And the reason we do 50-50s, Arnie, or what's your choice, or we've broken it up into quarter, or
debit or credit. Yeah, the reason we do it is because it signifies that in life, as in investing, one has choices to make, and those choices are sometimes different or sometimes the same, right? So it just highlights that we're all individuals.
Sometimes those choices are significant, and sometimes, like today's topic, relatively insignificant, but choices nonetheless. So I'm going to jump on and share screen with you. So if you're able to pass back screen sharing for myself, Arnold,
certainly
that would be brilliant. And essentially, what we were chatting about at the breakfast table this morning was two things. So the first one is actually a 50-50. So I might do the 50-50 before the screen share. Mm-hmm. When you're doing peanut butter on toast, Arnie, what is your process in terms of, do you do butter or margarine, whatever your choice? We're not picking on people here, not excluding. Butter or margarine before you put peanut butter on, or do you just, if it's peanut butter, you're just peanut butter on the toast?
Nowadays, I'm only peanut butter, and it's a health conscious choice. I used to always put butter and peanut butter because I believe that it just made it taste so much better.
Yep.
But nowadays, health conscious, Jolie, only peanut butter. What about yourself?
Great point. If I do have breakfast or toast, which I don't have toast that often anymore, that's a bit of a fasting thing that I do. That's for another podcast. But when I did used to have toast a little bit, it was generally butter before peanut butter. So yes, similar to yourself, it tasted better. You kind of got a little bit of that extra oil in there. It just sort of worked, but less dry. I think when you have just peanut butter, it's quite dry.
Do you know, when I was a kid, when I was a teenager, I used to do this thing where like I'd put the peanut butter, and then I would pop that back in the toaster so the residual heat would melt the peanut butter a bit. Did you ever do that?
I'd hate to see the bottom of your toaster after doing that.
That was very quick. No dripping. Just
quick, just in and out.
In and out, just so the residual heat would melt the peanut butter a little bit.
Never heard of that before. Let us know if that's just Arnie's weird fetish, or if anyone else out there does that.
I don't do it.
Strange one. The doctor's orders, the doctor wants me on lower cholesterol stuff. So if I do have to have butter now, I used to love the Lurpak butter, but now it's the cholesterol margarine, whatever you call that stuff. Share screen. So this one is not a 50-50. It's a 6-choice thingo.
6-choice, okay.
I don't know, 6-choicer, I think it is. Vegemite.
Ooh, okay.
So if you're watching on the screen here on YouTube, you can see there's 6 different slices of bread with Vegemite. If you're not watching, then it's ranked 1, 2, 3, 4, 5, 6, and it's from lightest shade to darkest shade being 6, 1 being the lightest in terms of spreadage of Vegemite. So, Arnie, where do you stand in the old age Vegemite debate of the thickness of your spread?
I got to say, mate, that straight away, 1, 2, and 3 are criminal. 4 is starting to get there. 5 looks like what I might have, but just backing it off in between 4 and 5. And 6 is just too heavy for me.
So for our overseas listeners, if you haven't tried Vegemite, do yourself a favor, give it a crack. If you really want to jump in deep end, go with 6. But be mindful you'll need a glass of water or something to help. I would probably be hovering around 2.5 2.5 to 3, 2.5, I'd say.
I can't believe that. Really?
Yeah.
Oh my God, Jolly.
Closer to 3 as I've gotten older, but I think 3, you're pretty close to a really good spread. Although those whole 6 look a bit dry. It doesn't look like a lot of butter behind those. I'm quite fanatical with making sure if I am having, low cholesterol butter, it's going to the edges of the crust. So you're getting that kind of spread across. And then I reckon 3 for me would be just about right, but it looks a bit clumpy in certain spots. I'd be wanting a smoother outcome.
If it was a smoother application, 3 might get there. But to say 2, you may as well just eat plain bread, mate.
Yeah, no, I probably wouldn't be at 2. 2 is, you are just having dry toast with nothing on it. But yeah, I think 3 is pretty close to me. So listeners, let us know where you stand with that. It's a big one. It's probably up there with the shapes debate. Shapes has probably gained the most traction for us over the year of doing this. So Vegemite, let us know where you stand, and Google Vegemite rankings, I think, and numbers, and that should come up with the image for you to be able to see it.
I'm super curious. I think we should put this image up on the Facebook because I want to know.
Yep. Or look us up on YouTube and you'll be able to see it. But yeah, we'll share this picture with you guys on our socials so you can get back to us, and we'll try to collate the rankings for next episode as to where the general Money in the tankers feel the rankings should be. Are you with Arnie towards the end of the spectrum, which is very, very heavy spread, or you're more in the medium moderate area with myself around that 3 ranking?
I love that. All right, good one, mate. That's a good 50-50 and a good
What's your 6th?
What's your 6th?
the 6th sense.
Love it. All right, well,
guys.
Good.
Thanks for being with us, tankers. Keep an eye out for episode 39 coming up next week. Get your questions in. Arnie, where can they get us at again before we finish up?
At Money in the Tank, YouTube, Instagram, Twitter, and Facebook.
Love it, crew. And we'll have Brad back next week for some more crypto updates, and look forward to giving you all the latest news next week. Cheers all.
See you, everybody.